Hello everyone, it's Jonathan Woods of Jonathan Woods Property, just following on from my last information video about HMO. So today I wanted to talk a little bit about something which comes up quite often on valuations, and that is the question between whether someone sells or they rent. Now there is also a third option which a lot of people, or many people I speak to, haven't really considered or don't even understand. So what I thought I'd do is I'd just go through the three options, the two well-known ones of sell or rent, and then the third, which is to rent and refinance. Now, obviously, let's take the example of an asset, something that someone's owned for a number of years, and through that time has possibly accrued a certain amount of capital value within that property, which is known as equity. Now, the thought processes that the owner may have would be to think, what is my next move? I don't want to be in this house anymore. I want to upgrade. I want to move for schools. I want to move abroad. All of those different reasons on why people want to move. Now, the first thought that comes into people's head is, I've got a lot of money in this house. How do I get it? And the first option would be obviously to sell the property. Selling realises that capital. So if you have £300,000 in equity in your home, you sell it, obviously you pay a fee to the agent. If you've been living in it yourself for the whole time, you can get what's called private residence relief, so you don't pay any tax on the income. That's something which people think is a kind of a right. It isn't a right, it is a tax relief. It is income, it is classed as income, it's capital, it's a capital gain. But the government give private residency owners relief on that at 100%. Now, that hasn't been changed for many years, but it could in the future. It's not a right. Let's not actually think about that. Now, if we can sell, we'll get all of that money minus obviously costs, and we can then buy our next place. Now, the other option, a lot of people do like to think about keeping hold of their asset and then being able to buy somewhere else. Obviously, London property has been a very safe investment. Haven't seen a great deal of growth over the Brexit years, but now we're starting to see that recovery. It's something that people may think about. So renting, people will look at renting and think, okay, well, what does my property rent for? They may have a mortgage, and they will usually look at their outgoings on their residential mortgage, look at the rent that it achieves, and then start to think, hang on a minute, that doesn't make me very much money. Or they might also think how am I going to buy somewhere else and keep hold of this? They may be lucky, may have a large amount of cash in the bank, but of course it does mean that it limits what they can buy. There's also the consideration of the surcharge on second homes on stamp duty, which is an extra 3%. So a lot of people will look at rental and think, actually, probably not a good idea, I'm going to sell. Now, that may be the case, it might be the right thing to do. If that requires, that sale is a purchase that you're going to move on to, requires every bit of capital out of your home to buy that place. If it's the wonderful dream home, forever home in the country, then that is probably the right option. But for many owners, there is the third option, which I think is something really people need to think about. And this is how sophisticated investors and portfolio owners continue to build their wealth. And that is through refinance. Now, refinancing is using the power of leverage in a mortgage to be able to unlock some of the equity within your home. Now remember, this is not equity release. This is not something you may have seen advertised on the television for older people to be able to remove equity from their home. Those are very different, and that's something we can maybe go to in a future video. But the point on this is that there is an opportunity to remortgage the property onto a buy-to-let product and release some of the capital from your home, and then use that either to further invest or to be able to purchase your next onward, with the cost of that borrowing being covered by your new tenants. Now, what I always say to my clients is that you need to take the sale value, you need to take the rental value, and then you need to go and speak to a mortgage broker or IFA. I've got a number of very good contacts within that industry, and they are worth their weight in gold. If you do not use a broker in your ongoing purchases or rentals or any financial concern, I think you're crazy. Again, we'll do another video on the benefits of using a broker, probably do an interview with one of my contacts. Now, in a nutshell, refinance is taking out a loan on your property. You may already have a residential mortgage, but converting that into a buy-to-let. Now, the benefit for that, firstly, is that in the majority, most owners, when they convert to a buy-to-let, will switch over and are able to switch over onto an interest-only mortgage. Now, interest-only mortgages got a bit of a bad rep, really, mainly in the press. There is obviously some, let's say, more risk in some cases of taking out a buy-to-let, a finance product which is interest-only, and that because at the end of that term, the capital is not paid back. Now, that may be a concern if you are living in your own home and you've lived in it throughout the term and you come to the end of that. You have two options. You're going to have to sell it and you're going to have to move out and give the money back to the bank, or you have to pay it off. Very different if it's a buy-to-let asset. This is something which is a concern over a certain number of years. But in the majority, the point of owning a buy-to-let is to see it accrue in value and then to cash in at the end. And of course, if it's on interest only, over the course of 20, 25 years, the value of that mortgage will have decreased significantly due to inflation. If you can remember 10 years ago what the cost of a pint, or if you're a smoker, a pack of cigarettes or a Snickers bar, it would be significantly less. And of course, I remember buying a bar of chocolate, 26 pence, they're now 70 pence. So if I'd still taken out, say, a 10 pence leverage borrowing on that Mars bar, nowadays, paying 10 pence back is a lot less than paying 10 pence back 10 years ago. So the point on this is, if you have a decent amount of equity within your home, I think it's extremely important that you speak to a broker or an IFA about the possibility of taking out buy-to-let finance, as you may find that you'll be able to take out a significant portion of that equity and still make a significant profit every month, but also have a lump sum in the bank to be able to use further down the line. Buy-to-let finance is the cheapest it has ever been. There are sub 2% buy-to-let loans. Some are actually coming in close to ones in parity with residential mortgages. This is the cheapest money will ever be. And just to give you an example, on one of my buy-to-lets at the moment, we have close to £400,000 worth of borrowing. The outgoing on that is £700 a month. And the leverage that we've used on that onto a property, the rent is £2,700. That gives a gross coverage of £2,000 a month. That also required or enabled us to pull out a significant amount of capital from that property and then to continue on to use that for further investment. If you're interested in learning a little bit more about this and you would like to give me a call, please do. Or send me an email. I work with a number of investors and first-time landlords and people that are maybe interested in being able to get their assets to work better for them. Obviously, I do sell properties, I let properties, and I would urge you, obviously, to speak to a qualified financial advisor who can give you regulated advice on finance. I'm here to give you a bit of knowledge, but of course, your IFA will be your first port of call. Many thanks for listening.